looking at the bigger picture. Eddie Ghabour, owner, Key Advisors, Wealth Management. Thank you for being with us. A new week, but a lot of down arrows. What say you?
So look, this is nothing more than a little pullback from an oversold condition. I wouldn't even really call this a big sell-off, relatively speaking, to the run-up that we've had. And I expect the sell-off that we're starting to see here, or this pullback, as I'll call it, is nothing more than an opportunity. I do think we'll get more weakness here in the coming weeks. But again, we will be looking to buy that. So we've been very active in our portfolios, but we aren't buying today's dip because I think there's going to be a little bit more legs, and it should, right? This is healthy for a market to actually have things cool down. I think you're in a position here where we just were in very overbought conditions, and almost everyone seemed to be bullish, and a lot of times it's better to play the other side of that. So having some dry powder to be able to buy the dip or correction, whether it ends up being 5% or 7%, who knows? But ultimately, I think those dips are going to be an opportunity to be able to get more capital to work for those investors willing to take that risk.
How worried are you when our Federal Reserve Chair Jay Powell said in the 60 Minutes interview yesterday that the Fed will take its time to deliver rate cuts, and folks are really hoping for more and a lot of them and such. Is it the kind of thing that could really spook the market throughout this whole week, throughout this whole month?
I think the interest rate market is really the biggest thing you need to watch. You just look at the 10-year bond. I mean, we've had a huge rally in that, and I think that's the biggest culprit for today's sell-off is what's happening in the 10-year. In regards to what Chairman Powell is saying, why would they aggressively cut rates if we're not in a recession? And that's the thing that I just don't get. If they cut rates too aggressively, the biggest risk you run is a reacceleration of inflation. And then they have to come in like they did with Volcker when they cut too soon. And then you have a bigger problem. So I don't have a problem with what he said. And I just never fell into or bought into the story of 6 rate cuts this year. If you're bullish on the economy, why would you beg for a rate cut? And to me, it doesn't make any sense. So I'm glad they're going to take their time. The market probably won't like it. But at the end of the day, if the economy stays resilient, equities will bypass that and grind higher. So I think their biggest fear is a reacceleration of inflation. And in my opinion, that's what will happen if they cut too soon and too aggressively.
I see. So at this point now, you don't want inflation to come back, and they're being very careful about the whole thing. How do you advise folks who are investing this year?
I think you have to be very nimble. I mean, we are in very uncharted territory. When you take a look at the massive amount of debt that we have, even this rally that we've seen, it's been very, very concentrated. There are lots of areas that are still well off of all-time highs. So I think for this year, what we have told our clients is that we're going to be very nimble because anything can change and you have to be able to change with it. We're not just going to blindly buy things and just hold it and hope that it goes up. So we'll continue to be nimble, be very active, and look for opportunities. And I think there will be some opportunities here in this market. But you got to take it day by day, week by week, trying to predict what's going to happen 6 and 8 months from now in this type of environment, in my opinion, is just too challenging.
Yeah. Now, I know you have international and small caps on the mind. Tell me a little bit about those two areas.
So India has been an area that we've been very bullish on since June of last year, and it has been, in our opinion, a great performer and has had plenty of days where it's generated some alpha relative to the domestic markets. And for us, wanting to diversify and going outside the U.S., we felt like India was the best place to be. Their inflation situation is really good. They're seeing accelerated growth in regards to their GDP. So we still feel comfortable there. In regards to here domestically, we did buy the Qs and the SPY after Chairman Powell's press conference, and we saw an acceleration of the selling there. So we did add to those places. And small caps, to me, if this market is going to stay strong this year, you're going to have to see it broaden out. And the Russell 2000 is still down approximately 20%. from its highs of 2021, and that's one of the biggest divergences we've seen in a very long time. So we did not buy small caps today. We think they're still going to go down lower, but we will be buying small caps throughout this first quarter if we continue to get the dips that we anticipate. So we'll keep the bigger cap names as our core holdings and to generate some hopefully additional alpha to the portfolio. We will look to add small caps and potentially be aggressive there based on what we're seeing.
Right. You know, on Friday, the Dow had its 9th record close of the year. I mean, you could use the S&P. Obviously, that's had some record closes as well. Do you see records happening again?
I do. I think the trend is going to continue to actually be higher after we get through this little sell-off that we're going to be dealing with here in the first quarter. Because again, right now, you know, you've got a lot of stimulus still in the system and your money flows are still heading into the equity markets. And so I think unless we see a huge drop-off in growth, and we'll be getting some GDP numbers. If we see a huge drop-off in growth or we see inflation start to show signs of accelerating, those are the two things in conjunction with the Treasury market that could derail our thesis that the market will continue to grind higher and be at new highs in the coming months.
Eddie Ghabour, Key Advisors Wealth Management. Thank you. Good to see you, Eddie.